Hello there, this is fairbinaryoptions.com. Let me just write here the logo www.fairbinaryoptions.com, and the chart that we are looking for here is the Australian dollar and US dollar. Why we are interested into buying calls on the Australian dollar, US dollar with this dip to the downside? You might say, well, this dip is supposed to go even aggressively to the downside. Maybe yes, maybe no. We are saying no. The reason for that is the way the market is positioned in general and the way this looks like. This looks like a zigzag from with the move from the upside, and this normally starts from the upside into the lows here, something like this, and this to be just a wave, just an A wave of this degree, part of this zigzag, and normal something like this, and normally this would be A, B, and the C wave to the downside. I would say that the C wave to the downside is already done, but this C wave actually started here after the B wave there. So normally if you take two and you try to divide the waves, basically this would be wave A of a bigger degree. Then this one would be the B wave to the upside that would end here, and of course the C wave to the downside most likely done with the lows here, either with these lows or with these lows here. Whenever you are looking at whenever you are looking at a move that should go to the downside in a zigzag, you should look first of all at an impulsive move or an ending diagonal. This one seems to be an impulsive move here. And I would say that we already have an impulsive move that ends here, this to be wave A. Then to be a B wave. Of the same degree that ends here. And now of course we are looking for a C wave to the downside, which again is most likely done. So this to be the B wave, and now to look for a C wave to the downside out of the same degree, and this C wave to the downside is most likely done with this move here. You might say, how come it is most likely done with this move here? Well, we have a so-called running variation of a contracting triangle for the fourth wave here, and this should be labeled 1, 2, 3, 4, and 5. So the fifth wave is to the downside with this move. Then you might say, what is this move to the upside? Well, this move to the upside, providing that the lows here are holding, but not mandatory, because it might be the beginning of an irregular flat. But this move that starts to the downside here, normally something like one, like this, 1, 2, 3, 4, 5. So ending basically here. So this move might be considered to be a flat three waves move, A, B, C to the upside, wave A. Now we are looking for a B wave to the downside, either already done or it is about to be done with another leg lower, which I don't think so. And now I would like to buy calls right here, right now. So buying calls with end of day expiration date. So this is 1.9302. Buying calls for a move to the upside for end of day expiration date. On the Australian dollar, US dollar. If you want to even be more aggressively actually than this one, you might even go for buying calls for end of week expiration date. And actually let's go end of week. Or let's do it like this: buying calls for end of day expiration date today, and buying calls for end of week expiration date. End of week will be tomorrow on Friday, as this is, as you can see, the 14th of November. Now this is our strategy here. We are looking for Australian dollar, US dollar to head to the upside from this moment of time, both for today and for the next day, tomorrow, and to expire in the money. Basically, when you buy calls and you look at the price to expire in the money, then you are looking for price to have a bigger value at the expiration date. Our case is our scenario here goes for both strategies, in the sense that by the end of the day we are looking for a potential A, B, and now a C wave to the downside normally should go. Or you might look at even for end of week, and that should be something like more than 24 hours from now, on Friday at the New York closing. This is pretty much what I wanted to show you for today based on this Australian dollar and US dollar. Normally this should be a corrective move to the upside that should go somewhere around 94. So this area here should be touched again, but again in a corrective move. It remains to be seen. Thank you very much for being here. Keep in mind, this is fairbinaryoptions.com, and all these analyses and recommendations are available or are possible due to our generous sponsor here, Lionine.